Hello, everybody, and welcome to this week's Middle Class Investor. This is Seth Martin, your host. It is Saturday, about 1 o'clock, May 28th, Memorial Day weekend. So, first thing I want to do is wish everybody a happy Memorial Day and be safe grilling and drinking and whatever else you do on Memorial Day, watching the Indianapolis 500 or whatever, going to your local parade or whatever's going on. Thought I'd go ahead and get this video recorded and go ahead and start the festivities on my end. I've got honeydews and all kinds of things to do, just like a lot of men around the country. All right, so we had a really big week in the market. You can see right here, right there, that's this week. And you can see that the market was up over 2%, I believe, for the week. And so it's a pretty strong move from this low down here. Last week we were talking about the failed head and shoulders, where it had, and really we've got to go to a daily chart. Let's look at a daily real quick. We'll come back to that. So on a daily chart, the head and shoulders was right here. You can see the left shoulder, the head. Now, you know, sometimes people say, oh, well, that wasn't a head and shoulders, that's why it didn't work out. Well, I don't know. Looks like a head and shoulders to me. The truth is, everybody sees what they can see, and you can only trade or invest in what you see, so, or what you know about. So you can see here we had a close on this day right here below the neckline. So that confirmed the head and shoulders, but then the very next day, the market gapped up a little bit and then ran up and closed above the neckline. The next day, it closed above the neckline. So, you know, the head and shoulders failed. And that happens. The idea is you would have gotten stopped out right in here somewhere and taken a small loss. Now, the question is what is the market doing? And unfortunately, I have no answer for that. You know, the market's very, very narrow. So what does that mean, narrow? Well, that means, you know, there's just a handful of things that are working in the market. You got the financials have been working over the last, you know, several weeks. You've got things like utilities. Technology even now is kind of split. You've got some, well, I don't know, Apple's done a little bit better lately. You can see here lately Apple's done better than it has been doing, but I would say that Apple is still, you know, broken for the time being. But really the only thing that's happening in technology land is Facebook. So everything else is really, there's some semiconductors that are, like if you look at AMAT, I spelled it wrong, AMAT. Applied Materials, you can see that's in a strong trend. If you look at, I think Adobe, it's doing pretty good. Yeah, Adobe. But the vast majority of stocks are really not doing that great. And so that's what we mean by the market's very narrow. And this usually means that, you know, the market as it narrows, as fewer and fewer stocks are doing what the market's doing, eventually it begins to fall under its own weight. But that's not what we're having here. So I'm not sure if this is just a Fed-driven kind of thing, you know, don't fight the Fed, or maybe we're at a top, you know, and, you know, maybe we're making a triple top or whatever this is. Not really sure, but there's some things that are coming up that are important. I told you all last week about the movie Brexit, and I posted the trailer to the Middle Class Investor site so you could watch the trailer and remind you to go watch the movie. It's very good, and it looks like to me the people of Great Britain are going to vote to leave the EU. Another interesting thing that's happening in the world that's, I don't know, I haven't seen it on CNN or Fox or ABC, NBC, CBS. I haven't seen it anywhere really except on BBC, and that's Venezuela. Go look at some YouTube videos about what is going on in Venezuela. It's become a complete failed state. People are spending every day, all day, looking for food in grocery stores. Their currency is going down in value every day. I've heard estimates as high as 300-400% inflation. And because of price controls, anybody that was producing anything in the country has stopped producing. So the people are really left with not much to, choose from. And the government's blaming it on the United States and, El Nino. And I mean, it's crazy what's going on there. So very unusual to have a collapse of a fairly modern, country in this day and age. Usually these socialist failed experiments are all, in the past, in the early 19th century or very, very early 20th century. So something that's kind of interesting is happening in the world. Yes, oil's low, but oil's low for a lot of countries, not just Venezuela. And yes, they are having a drought. That's true, but there's droughts all over the world at any one time. So clearly, there's something more than El Nino and oil causing problems in Venezuela. I'll let you watch the videos and you can decide. But it's pretty crazy stuff. The VIX. The VIX has been in this little range. If I can get it to come up, there we go. The VIX has been in this range now for a while, and I don't know, when the VIX is low and in a range for a long time, it tends to kind of lull market participants to sleep. And you can see we're at the bottom of this range, and so the probability of going lower here is probably not very good. So we'll probably have some sort of expansion and volatility next week, which means the market's likely to go lower. Now, I mean, can the VIX go lower and the market go higher? Well, of course it can, but we are at a very low area on the VIX, and this lower zone is held for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks now. So it's pretty strong support. And for this to break down through this, it's not very probable. Now, it's possible, but not probable. So the difference is possible just means non-zero probability. Probable means the probabilities of it bouncing are significantly higher than the probabilities of it breaking through. So anyway, that's what we see there on the VIX. The Dow looks pretty much like the S&P. Now the Russell, what's interesting is when these markets do bounce, the Russell and the NASDAQ, and as you might expect, they really rally, even harder. So you can see the Russell is almost up to this previous high. And if you look at the NASDAQ, you'll see something very similar. If I can, my clicker is not clicking right. There we go. So you can see the NASDAQ is very close to the top, whereas when I say top, I mean top of this last pivot. So let me just clarify real quick what I'm talking about. So there's this pivot here, from here to here, and then down to support. And then what I'm talking about when I said, near the top, this is getting very close to this pivot. If you look at something like the S&P 500, it's not as close. It looks close here, but it's actually not as close percentage-wise. But clearly the global, if you look at the global Dow, or you look at some of these, the NYSE, the New York Stock Exchange, whoops, that's $NYA. They look a little weaker. This is the New York Stock Exchange Composite. It looks far weaker than the S&P 500. and the Dow. So I don't know if that means, that could mean that, the market, when the market gets defensive, if a lot of people start shifting their attitude from bull to bear, they start moving money from riskier issues that have gone up 2, 3, 4, 500%, and they start rolling that money into Honeywell and GE. Let's look at Honeywell. So you can see Honeywell's at all-time highs or whatever here. GE's really close to its highs. Walmart's been doing really well. So money tends to rotate out of more volatile issues, and rotate into stocks that don't move very much. So, and this just really has to do with the amount of money in the market. People that have billions and billions and billions of dollars, they really can't take their money to cash because, well, in some cases it's illegal. There's been laws passed to disallow that, but in other cases it's just not practical because they have to. There's so much money. They have so much money. They have to spread it around into a lot of different places, and that requires not selling, because if you sold, let's say you had a million shares of Walmart and you decided to sell them all at one time. Well, you'd see Walmart down here at $15 or something. So, and this is not Walmart. What is Walmart? WLMT maybe? No. Gosh, I forgot what Walmart was. WLT? I don't know. I thought it was WAL, but it's not. So anyway, clearly don't trade Walmart very often. Anyway, one of the things I wanted to look at, because we've talked about this before, is the interest rate market. So let's look at the 10-year first. I think the 10-year is in some sort of triangle pattern here, and because what we know about triangles, we know that we're going to make a low here in interest rates. So you can see that this move here, let me just show you what I'm seeing here so that you can begin to see stuff like this. You can kind of see there's a move, there's kind of a pivot here, and then a rally up into this kind of zone here, and then a real strong move down here. And this whole area right in here looks like a kind of a capitulation where people gave up, and then the bulls just rocketed it higher. And then now you've got some sort of consolidation here. You can see, you're just oscillating back and forth inside this tapering price action. And this tends to coil the price action up into like a spring. So if this is the direction, this right here down, if that's the direction, and this is a consolidation, so you got a kind of an A, B, C, D, E. That means, either like starting next week or the week after, we're going to see interest rates come down here and take out this low. Now, usually when you have a triangle like this, it doesn't take out the low by much. So I think our box that we have here makes a lot of sense. Well, let me zoom out and try to go to yeah, here we go. So, well, shoot. Every time I do that, it changes the screen. Let's try this again. We'll go way back here like so. And then, okay, so you can kind of see, this box here that I've drawn below this low. So when this comes out of this triangle, look for interest rates to move down into this box, but not too far. So I think what's likely to happen is this low back here on the week of July 23rd, 2012 is going to hold. So this is likely the low for interest rates. But we've had a pretty good pullback. So if you've been ignoring me and you've held on to bonds, then you've gotten lucky, let's say, or maybe you're just better at understanding some of this than I am. But I think if you've got those bonds now, you hold them a little longer and you wait till we pull into this support area, and then you sell them. Because again, I'm going to say it again. If this is the low, if this is the first move off the low, and this is the first pullback, this next move is going to be, just extraordinary. And it's just going to keep on going. And people are going to go, why are interest rates going up? The Fed's doing this, the Fed's doing that. And it's just not going to be. I mean, they're just going to keep going. So remember, the Fed follows rates. It doesn't set rates. Now, having said that, we've looked at this IRX before. This is the 13-week Treasury yield. And you can see here that we are right at, I think I made a comment last week that if we break above this 0.35063, that the Fed will likely raise rates. Well, you can see that we're below it. The Fed meets, I guess, is it next week? It's either next week or the week after. I think it's the week after. I think the Brexit is next week. There's so many things going on here in the next couple weeks. It's gotten confusing. I know the Democratic Convention is coming up. You got the Brexit vote. You've got the Fed meeting. So there's a lot happening here, but it looks like to me the Fed is probably not going to raise rates in June, which means they'll probably raise in August. I think that's when their next meeting is. But as long as we're below this line, and I could be wrong, but I'm talking in terms of probability. As long as we're below this line, the Fed's not likely going to raise rates. In fact, this looks like this could pull back a little bit more, something like that, before it breaks out above there. So again, it could be wrong. I mean, this could just open up next week and just start running from here, and in which case the Fed would raise rates. But I think as long as we're below this line, so the day before, the Fed announces, go and look at the IRX and see what it shows. If it's up here somewhere, then expect the Fed to raise rates. If it's down here somewhere, or it's below this line, or right where it is right now, don't expect the Fed to raise rates. I would say that's the probability, the high probability move. Let's see. We got. We're going to look at some of the currencies here in a minute. I just wanted to look quickly at Germany. So Germany's still, in a downtrend. Had a really good week though, and could come up in here to the top part of this channel again, and then bounce down. Sometimes you get a move all the way to the top of the channel. Sometimes the reason I have this midline here, sometimes you just get a move to the midline and then a bounce down. It just depends. You can see this one here, it bounced down to the midline. Of course, the channel wasn't there yet, but you just have to kind of pick your spot. Here you can see we broke above the line a little bit and then sold immediately back off, and now it looks like the channel is holding, or the resistance line is holding, and it looks like it wants to roll over here on Japan and go lower. Interesting, we've had the G7 thing going on in Japan, and just some of the things they said were just unbelievable. Like we all need to work together to make sure that we keep printing money and doing what we can to spur the economy, as if what they're doing, makes the economy better. I mean, all they can really do is make it worse. In fact, what they really need to do is just lift a bunch of regulations, get rid of a bunch of stupid laws, and let people be free to operate in the economy the way they want. And of course, a lot of opportunity will happen. People will have jobs and so on and so forth. But you can't convince them of that. They just think that they're masters of the universe. So United Kingdom is a little stronger. You can see here. Now to me this is interesting because maybe this has to do with the Brexit. It was in a downtrend. It was broke through the trend line, came back, retested the trend line. So this is kind of a bullish looking deal here. Where the market comes up, breaks through the trend line, retests the trend line, and then you can see it's been nothing but bullish since then. So maybe this breaks out on the Brexit vote and just keeps on going. So based on the movie that I watched, just a real layman's view of things, if the UK got out of the European Union, I think it would be a lot better for their economy. So maybe that's what market participants are seeing here, and so maybe that's what we're going to see here. We're going to see an exit from the EU, from on Great Britain's part, and we're going to see the UK market take off from that. All right, let's look at some currencies. Here's the US dollar. Let me do this. A little tool over here. Here's the US dollar, Japanese yen. And you can see that we've been in a down, whoops, I want to take that away. We've been in a downtrend for some time. And, you know, recently we've had, last 4 or 5 weeks, we've had a pretty strong bullish move here. And you can see I've got this box here. This is kind of the wave 4 support area. And we might pull back a little bit and then make our way to that area. But if you're going to short Japanese yen, if you're looking to do that, you might hold off and wait a little while and just see if we get a bounce a little higher. Certainly, there's no entries at this point. I don't see any entries. So, but it's been a good short thus far for those of you that have been looking at that. Here's the euro US dollar. I've updated the little drawing there. So I'm expecting the euro US dollar to pull all the way down in here, then make a fairly quick, zigzag move up, and then from there a big sell off. So what you're seeing here is you're seeing kind of an A, B, C, A. This is A, B, C, D, E, and then after E, you get a break. And again, this is a consolidation move. Anytime you see a triangle, it's usually a consolidation move. So in other words, you wouldn't expect this to break out to the upside right here. Not after you see a big long move like this. This is a consolidation move, or a trend continuation pattern, as sometimes people call them, and hence the name, trend continuation. If this is the trend and we're triangling, sideways, then that means we're going to continue to the downside. So what you could do is look for the yen to come down here, make its way up into this area somewhere. After it starts to turn down, go ahead and enter a position, and then trade it down to a new low down here. And that's got some good money in it right there. So you make a lot of money on a trade like that. All right, let's see. Crude oil. Crude oil's been pretty strong. There's that red line that we talked about. We were talking that maybe it doesn't quite make it all the way to the box. Maybe it only makes it to the red line. And of course, it looks like it's going to make it to the box. So crude oil looks very strong, but it looks strong inside of a pretty strong downtrend. So it's very unusual for something to bottom like this and that be the end all. So I'm inclined to say that this is probably not the bottom. Now, it did do that in 2008, but because it did it in 2008, it almost you can almost say that the market just doesn't repeat itself like that. So I'm inclined to believe this is probably some sort of fourth wave move, and we're going to roll over at some point and continue lower, probably down in here to the mid-teens is my guess. And probably if you wanted to invest in oil, you need to go look at some of the biggies. Like, I think ExxonMobil's pretty strong, but I'm not so sure about some of the ones that have been more closely tied to oil. ExxonMobil is a very vertically integrated company, from production, drilling, to midstream, to chemical, to refining. I mean, they're very diverse. Whereas like a Valero, for example, VLO is only in refining. So refining must be doing pretty good because Valero's up. Where if you look at ConocoPhillips, they're in oil production, they're in midstream, and they're in refining, but they seem to be more heavily weighted into the production side of things. Or if you look at the XOP, which is an ETF for oil and gas exploration, you can see this is a pretty strong downtrend. So could we have bottomed here? Sure, it's possible. But, I don't know, not likely. If you look at EOG, of course, it's one of the stronger production companies. I don't know some of the other symbols. Hill Corp. What about, now this isn't a really good one, Chesapeake, CHK, mainly because Chesapeake just has a lot of debt. So yeah, they're $4 a share. Devon, DEV, or DVN, excuse me. Devon is not necessarily a good one to look at either because they have a lot of Canadian oil sands properties. And so they're going to probably go lower just because they're going to have to sell all that off or hold it and not produce anything for some time to come. So anyway, that's oil. So let's see, is there anything? Let's look at the dollar. We didn't look at the dollar. The dollar seems to be done pulling back. You can see here. Move up a little bit and do this. There we go. So you can see that we're expecting the dollar to move up into this area up in here around 105, maybe higher, maybe this 107. But I think it's safe to say the dollar's done going back. You can kind of see this little zigzag move. This is very typical of a consolidation slash pullback and an uptrend. So we kind of already talked about that, with triangles. This isn't exactly a triangle, although we thought it was going to be a triangle, or I thought it was going to be a triangle, but it just is a very large sideways pattern in the context of a larger uptrend. So look for the dollar to move to at least 105, if not higher. And that's probably going to mean lower prices for gold and silver. You can see here's gold. You can see it's already pulling back. Has been pulling back for a couple of weeks now. But you might see gold find support here, bounce, and then fall back even further. So you might see something that looks a little bit like this, and then a fallback to like that, and then you'll see gold bounce. Okay, so this is going to correspond likely to a dollar move up, the euro US dollar down, gold up. So keep an eye on these things and start to notice how they all are related. How they tend to either inversely correlate or correlate more closely. We've pretty much looked at everything. The only thing I saw on like NinjaTrader that is, again, we got this kind of ABC look here. This is a weekly of the ES, and you can see that this is now this is the ES, not the S&P 500, but they track each other. It's just the actual values could be off a little bit. So, but this is kind of showing that this is likely to keep on going up, and we're likely to move into this area here above these highs and make new highs around 2140 on the ES. So, I mean, these things can be wrong, but this is a trade that you would definitely want to take if you were trading. And the reason is because it's clearly an ABC. It's clearly in the direction here of the oscillator. So this would be a good trade. Now maybe once it, maybe you set it to break even or something. And so if it comes back to, so let's talk about this. What if you were in this? What if you were trading? You were trading the ES long term, and you're making money. You're in the money right now, but it's pulling back. And let's say it continues to pull back down to here. Well, you could set your stop at break even or slightly above break even so that you made a little money on it. So you could set your stop maybe like right here. And then that way, if it comes down here and you get stopped out, well, you made a little bit of money. And it was still a good trade to take. Of course, these things, where you put your stops and things like that it needs to make sense. It can't just be completely arbitrary. But a good way to think about it is look at this trade here. Okay, so the entry bar is this bar right here. It's a blue bar. And one of the reasons this is the risk is exceeded is because this blue bar is way off the low here. I mean, the low is way down here and the blue bar is here. So where would the stop be? Well, the stop would be, just below that low of this entry bar. So what happened? Well, it came up, it bounced, it basically double bottomed and took off. So now that you're up here, you've been in the trade for a while, where now where you set your stop is a little bit more arbitrary, but you definitely want to protect your profit, or at least protect you from losing, turning a winning trade into a losing trade. So you might want to set your stop somewhere above break even, so that you have a little bit of gain here, so you don't take a complete winner and turn it into a complete loser. Some people set their stop at 100% risk. In other words, if I risked $400 here and it comes up here and it pulls back and goes through this and stops me out, this 100% mark is where I made 400. So this would be like a 1-to-1 risk. Notice this distance here, from here to here, is equal to this distance from here to here. So in other words, this area right here is where our risk, we've overcome our risk and we've made whatever we were risking. So if we were risking $400, we would have made $400 right here. Hope that's not too confusing. All right, well, that is about it for this week, guys. I've been on here for about 30 minutes. Time to probably shut it down and go do some Memorial Day stuff. I want to thank everybody for coming in and viewing these. My hope is, and keep your fingers crossed. My hope is that if the market starts selling off and we start really kind of meeting our objective, and that's to protect people's capital, that more of you will share this with friends, family, and we'll get more viewers, and then there'll be more, be more comments. There'll be more, there'll just be more back and forth. So it's really what I'm hoping for. You can follow me. You can put in if you're a Twitter guy. Occasionally I post some articles that I see on Zero Hedge and other places. Probably going to be posting some on Venezuela. I mean, it's really starting to get interesting down there. There's been reports of people hunting cats and dogs and eating pigeons because they just can't get any food. So I mean, it's very sad, but it's also something we should look at and understand and make sure we don't repeat those things here. So you can follow me on Middle Class Investor, or you can search on the @ sign, the little A with a circle around it, Investor Class. And then, of course, you can copy and paste the YouTube links and forward it to your friends and family. All right, everybody. Well, thanks a lot for coming in, and we will see you and talk to you next week. Take care. Bye-bye.